Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to look at some ideas on playing the move in Amazon, but doing it in a way that is not quite as expensive and coming out and buying puts. Because when you look at this chart, and of course there's been a lot of debate about this sector and Amazon in particular, but I have a hard time looking at this chart pattern and saying, okay, I'm going to come out and just directionally buy put options, because that has not been a terribly successful strategy for Amazon. Now, admittedly, we can say that there's a little bit of a wedge pattern building up here, or at least some consolidation in price, and that will eventually have a pretty solid break. I did not like the idea of coming out and buying put options because they were just a little bit too pricey. So another way to look at this strategy, because we are below the 50, the 8-day, and the 21, is to just come in and first off be mindful of your extension to the downside. So when we look at these most previous highs, we've got 974.40, 975 there, and then of course this being a lower high. So it does create something where, at least as we currently sit, you've got a very easy place to draw your lower to higher to create this 1272 extension. So when you've got something like this and you're trying to think, where should I structure my trade, or where should I look for it to break, I was looking for this move down here at 940, because if it breaks, I don't think it's going to be a small move, and 940 has the benefit of being kind of a nice round number, not so much like 950 might be, but just something where we could come in and look at playing a butterfly through this, because anytime you have these solid dollar strikes, it just gives you a little bit easier place to look at for your exposure. And in something like this, basically what we're doing is coming in and buying the 955 puts, selling 2 of the 940s to help finance it, and then buying the 925s, so if Amazon does just fall apart, we're not sitting there with those naked 940s. These are some of the foundational things that I think you will find to be most helpful in a butterfly, because if you haven't had much luck with them in the past, it's probably because you're trading them too small and not giving yourself enough time to allow them to play out. So as we started walking through the structure of this, looking at it $15 wide, you can get that relatively inexpensively. And then in my mind, if this breaks and moves higher, okay, well then we'll assess it from that point of view, but it's going to be much easier to manage than if you had directional puts. Then if this does pay off and you can move down into 940 over the course of the next 8 days, well then this risk reward is very nice. So just some thoughts on playing that, how you can identify your targets in those types of patterns, and a less expensive way of getting involved than buying puts, and a better risk reward than selling the call spread. So I hope that helps, and we'll see you guys at the next free video.